how to double your income by saying no. Hey, today's podcast, I talked to Jason Armstrong. He was an accountant who's now a mortgage broker, and it's a fantastic conversation. And one of the things that we talk about is how him saying no and actually leaving the accounting business was the best thing he could have done for his finances, how he came to that decision. We talk about how he works with financial advisors, given that he's got such a background in accounting. And he gives a strategy that I have never heard before when it comes to working with financial advisors. And when he shared it with me, I was like, oh, that's good. So this whole podcast is, hopefully it is jam-packed full of great stuff. That one section is pure gold. You're going to want to go back and listen to that. He talks about defining who your ideal client is, how to leverage technology. I think you're going to really enjoy this conversation. Hey, I'm Scott Peckford. This is the I Love Mortgage Brokering podcast. It's a podcast that is #1 podcast for mortgage brokers. And the whole goal is to help you level up your mortgage business. And I think you're going to enjoy this conversation I have with Jason. And so a little bit about me. I've been doing this for over a decade now, and as well as I launched a company called Bricks Mortgage, which is a mortgage brokerage where we help mortgage brokers scale through partnership with them in their brokerage. But I think you're going to enjoy this conversation. Check it out, and I'll come back at the very end and wrap up. Hey, Jason, welcome to the show.
Thank you for having me again.
So thanks for having me in your office, and we're doing this roadshow podcast tour. And so I wanted to connect with you. I've known you for a long time. So maybe for anybody who doesn't know who you are, tell me a little bit about yourself and how you got in the biz.
So I've been in the business about 9 years now. I started out just as part-time. So I had an accounting practice back in the day that I sold 4 years ago, thanks to your encouragement. So I was doing it part-time for 5 years. And then 4 years ago, I decided to take a leap and go 100% into brokering.
So why did you like brokering more than accounting? What was it about it? Because that the accounting takes a lot longer to get licensed in, and you can be a mortgage broker pretty dang quick.
Yeah.
Doesn't mean you're any good, but you can have a license.
So significantly less stress, control over my time. And a big thing for me was once you dealt with that file and it was done. We're in the accounting world. If we finished that file, it was either back next month, next quarter, next year, and continuously repeat. And that stress level was significantly more than the mortgage space.
Right. Let's go back to what you said 4 years ago. So 4 years ago, you were kind of doing a bit of both. You're trying to captain two ships. What was the decision? How did you make that decision to switch? Because there's people that are in that boat right now that are listening that kind of have two things, and they could do one. Some of them have to do two right now, but some of them could, like you could have at that time. You were in that.
So at that time, I reached out to you to join your coaching program because I wanted to increase my volume in the brokerage space. And September 22nd, you called me and had an interview to determine whether I was a good fit for your program. And you asked me 3 questions. What am I doing? What do I want to be doing? And why am I not doing that?
Right.
And I provided you the order that I'm spending my time and effort in accounting, then my team, then my own production. And where I wanted to be was my own production, my team, and then accounting. And the next day I called up another accountant and sold my accounting practice.
Right. And then, so what happened to your volume of your mortgage business after that?
3.5x.
Right. Just by having one thing to focus on.
Yeah.
Yeah.
But I was in a comfortable position where I had my own business for 10 years, had a nice income stream, that security, predictability, where I didn't know what I was getting into on the mortgage space if I took that leap. The only regret that I have is that I didn't do it sooner.
Right. That's usually what people say once they make that decision. And then, so fast forward to today, then what kind of things or changes have you made to your mortgage business? What have you learned over the last few years?
Yeah. So I've implemented a bunch of things that I've obviously learned from yourself or Woodhouse. Most of my business is coming from one of those two individuals.
Yeah, we all learn from somebody too. So there's nothing is not like we invented anything. It's just a matter of sharing things that someone else has done and that works.
Yeah, absolutely.
You should, in our business, I believe it should be copy and paste as much as possible.
Yeah. And in the accounting world, I couldn't automate things that I wanted to, where in the broker space, again, going back to some questions that you had was, is your client having the exact same experience, right? From whether it's your best friend or a random person off the street, did it have the exact same experience working with you? And at that point, I put together my client journey and automated it, right? Mm-hmm. So actually Denise, she was implementing Jungo at the time, so Salesforce, and I tapped into her resources and implemented it for myself and then ultimately my team as well.
So the great part about Jungo, and she showed me how she uses Jungo, and it's worked really great for her. it basically got automations at certain stages and you can keep people in the loop. But what's a change or an improvement that you've made? Because I know you're not the kind of guy who has a customer journey from 4 years ago and there's no updates. What's something that you improved or tweaked over the last little bit?
Well, it's constantly improving, constantly tweaking. So if there's any time that a client or a realtor or solicitor, et cetera, has coming back and saying, hey, we didn't get this update or we missed this piece of the transaction, we're saying, how can we improve that? Right? Where can we add that communication or where can we change our automation so that we're not making those mistakes and not dropping the ball?
That's usually what I find too. It's usually when there's a miss. The miss is where there's an opportunity to improve something or something doesn't go the way you want. You go back and look at it and go, okay, how do I put in, like you said, some kind of a checklist process or an automation that makes sure that this particular error doesn't happen again?
Exactly.
Because errors create frustration and confusion and that's really good. What about your business? Where does it come from? Like how much of your business would you say comes from your previous accounting people and then from other sources?
So the first 5 years, there was nothing but accounting clients. I didn't actually go out and market it, didn't work with realtors, didn't do anything. So now I'd say a big chunk of my business comes from financial advisors, 2 in particular, and then 2 realtors in particular. So one realtor in London and one realtor in Toronto, and then the 2 financial advisors are in London.
So what do you think is the reason that these financial planners work with you so much? Because a lot of people want to do more financial planner business, but there seems to always be a miss.
I think the CPA background helps. I have a better understanding of their financial statements and their financial position and how can I increase their wealth rather than just looking at a simple transaction of how can I put them into a mortgage.
Right. And so they refer you clients and do you refer them clients as well? Does it work both directions?
It does. It's a struggle going the other way.
Yeah.
So because a lot of my business does come from financial advisors, it's like I can't.
Like what percent would you think comes from there?
Probably 65 to 70.
Oh, that's a lot.
Yeah.
That's a significant chunk.
Yeah. And if financial advisor A sends me a client, I can't be like, hey, go to financial advisor B for your advice. Right.
Yeah.
So my guarantee to them is like, I'll treat them as if, they're my family type thing.
Yeah.
And send them back to you, hopefully in a better financial position, and continue on the level of service that you provide them.
Right. So what would your advice to somebody be who wants to get more business from financial advisors? Did you know these people from before? If they don't, let's say they don't have a CPA designation, so take that off the table because that's not something that's easy to replicate.
Yeah.
But what are some of the things a broker could do to get more business from a financial planner?
Show interest in their business. So a lot of sales reps in general, right? Whether they're realtors, financial advisors, mortgage brokers, they love talking about themselves.
Mm-hmm.
Have the meeting and let them talk about themselves, right? But actually be interested in their business. But when I'm talking to financial advisors, I'm asking them basic questions, right? And how can they improve and add value to their clients? So a couple questions. I just had breakfast with a financial advisor 2 weeks ago.
Perfect.
And it was, do you run a report to show who contributed to their RSPs less year over year? So who contributed 20 grand in 2022 and then contributed less in 2023? Right?
Oh, okay. Interesting.
Or who under the age of 65 is withdrawing funds from their RSPs? And do you know why? Right. So those individuals are actually reducing the assets under management for the financial advisors, which decrease their revenue.
Right. And it also decreases that person's long-term
net worth.
Nest egg.
Yeah, absolutely. But very few of them are actually running these reports to see where these opportunities are. Right. So if a client is investing 20 grand 1 year and invest nothing the next year, typically there's financial issues. Right. So stop looking at just the investments and look at the overall total net worth of that client. And hopefully you'll.
Okay. I've talked a lot. That's a very ninja move. So then what does the introduction look like? So if a financial planner runs this report and they go, oh, I see people that there's this, up and down of what they're putting in or taking out. How do they introduce you and what's that look like?
It's pretty easy, right? So now that financial advisor's having that conversation with the client, figuring out that they're in a worse financial position than what they actually thought they were. And 9 times out of 10, there's additional debt outside the mortgage. So now we're saying, hey, introduce.
So they're either liquidating some RSPs or stopping putting money in there to cover debt, which 100%. Means they're Right.
Yeah.
And so it's sort of like a early warning, like on your dash light on your car that says you need to check engine light. It's kind of like that.
Yeah. And then give examples, right? So
right.
I always give an example, like obviously I'm cherry picking my best example, right? But a financial advisor had a client that had $10,000, wasn't making any contributions. The money was just sitting there. They had a $200,000 mortgage, $800,000 asset in their home, right? The advisor didn't know that they also had $150,000 in consumer debt.
Right.
Right. So we had a conversation, introduced me to the client, did a $400,000 mortgage, consolidated all their debt. Now they had 40 grand extra to invest with the advisor. So that assets under management went to 10,000, from 10,000 to 50,000. Right. And then they contributed $1,000 a month. Right.
Because now you improve their cash flow.
Yeah. So now that client is significantly better off from a financial perspective. The client's financial, their wealth and everything else is number one priority. But the advisor's better off because now they have a 5X client, right? Making them more money. Yeah. And obviously I benefit because I'm making the commission off the mortgage.
Right.
And that client long-term.
You got a long-term client. Okay. That's some genius stuff there. Is there anything else that you found talking to financial planners that was, that you found them to be helpful?
That's kind of the biggest couple of questions that I have. But then also if you're like one of my financial advisors goes heavy into the medical field. So, their focus right now is going and presenting to universities across Canada, and getting medical residents. And so a lot of those individuals are moving from where they did their undergrad or med school and going to do the residency. And I'd say 70% of my referrals from that advisor was medical residents. Now that I've tapped into that program.
Right. Yeah. So they're doing on the front end, building that relationship, and then you get to solve one problem for them or one part of that package.
Yeah. And then become an expert, right? So that projected income for physicians program, that's a niche product, right? And
some lenders have that, right?
Yeah, a lot actually just introduced it this year as well. Yeah. So most of them have it. Scotiabank was and is still my go-to for that. Yeah. But RMG, Manulife, First National,
projected income for physicians. We should have that for projected income for salespeople. Yeah. Right. Yeah. Right. Okay, if you're listening, lenders, they'll be like, "Yeah, never, Scott, not happening." That's hilarious. Okay, so basically, so as you said, talk, understand their business, listen more than you talk, and then figure out ways. And I love how you frame that. Figure out how you can solve pain points for them. And in that case, you're solving something that they're probably not even aware of. Yeah. Like until you bring that awareness to them.
Well, and so many of these medical residents or any client of a financial advisor, if they're going into the branch for their mortgage, that branch is trying to poach that client.
Oh yeah.
Right.
Yeah.
So
they're not going to just want the mortgage. They're going to want the investments and everything. Yes.
Right? So if you can keep them out of the branch,
right.
Fantastic. Right. So it's a win-win again for everybody, right?
Right. Win for the advisor, win for you, win for land. Yeah. So that's really good. Okay. That's fantastic. Asked about your business, where it comes from. We talked about, so talk to me about building a team. So you started out, it was just you. So tell me about, you've got this team that you've set up here. What have you learned, pros and cons of having a team? I'm curious.
Yeah. So actually, when I entered the industry, I joined a team, but as a team lead with that individual that already had a team. Yeah. So right from day one, I have had a team, but it's fluctuated between 2 agents and 15 agents, and I've gone up and down. Even when I moved brokerages, now I'm with Mortgage Architects, we went from 9 agents and we said, no, we're only bringing 2 over. So at that time, it was just Colin Dombrovskis and myself that came over to Mortgage Architects, and then we rebuilt. Now our focus is on rebuilding with more experienced agents, right? So I'm not the team lead to train on how to underwrite a file and, what's the lender guidelines. I'm more of the systems and processes. So we're looking for that higher caliber agent that maybe is a $10 to $15 million producer that wants to be a $25 to $30 million producer.
Right.
And help them achieve that goal.
Right. And they can plug into your systems that you've already just take time to build.
Yeah.
And so what has been the best part about having a team and the worst part from your perspective? And the thing I love about you're just a straightforward guy. There's like, this is, there's like anything, there's pros and cons to it, right?
Yeah. The best part is seeing people succeed, right? Like I love seeing people close that difficult file or have a great quarter or year, et cetera, right? But that comes with its own challenges and stress. And, you're often putting down your own work to help them solve their problems.
Right.
So sometimes I find myself not on top of my own clients, right? And I'm not producing what I could have the potential of producing because I'm, building the relationships with lenders or dealing with, fires with clients and what have you. There's a lot of stuff behind the scenes that most people don't understand.
Right. Oh yeah. It's back to you have a little bit of two hats there again, sort of two captains of two ships, but at least the ships are in the same, in the same Navy, if I want to use that metaphor, because it's not like before when you're an accountant and a mortgage broker, there wasn't the same overlap, right?
Yeah.
That you have now. So because your team, your employees or your staff that help you help them. So then there's overlap there too. So it's a little different. If somebody knows you well, what would they say your superpower is? What would they say? Like Jason is really good at what?
The systems and processes.
Yeah. And is that the part you like the most?
Yeah, absolutely. Yeah. So even when I was getting my designation, I focused on internal controls and risk management, right? So looking at the systems, looking at the communication and where have we dropped the ball in that process and how can we improve? And so I built out our current systems to...
So is this when you were an accountant, you mean?
Yeah.
Yeah, you did that as well. And then so when you got into the mortgage business, what surprised you the most about mortgages versus being an accountant?
The income potential and how easy it is to get into the industry. So the barriers to entry are almost non-existent.
Yeah, it's harder to become an Uber driver almost because I think they do more background checks.
Yeah, in Ontario,
that's what I'm talking about. Ontario, not everywhere. Yeah,
yeah. But like a couple $100 on a weekend course, and you can be helping an individual with their largest financial transaction. Right? That's kind of scary. And how many times have we seen clients that are either in private where they should be an alternative or alternative when they should be in prime lending because the broker that put them there
didn't know. Yeah. They didn't know. I'm going to just say most of them didn't know, but there are a few people that don't care and are just trying to maximize their own.
Yeah. And hopefully that's not the case, but
there is a percentage. I don't want to paint the industry in a bad brush, but most people, it's either incompetence, but there are some that are nefarious, I would say.
And even like within our industry, like when you join a team or with a different brokerage, etc., they'll push you towards different lenders.
Yeah.
Right.
There are some brokerages that they love private lending and it's like everybody comes in, you're a doctor, private mortgage. It's like, do you really need a private mortgage? Like, I think there's a bit of crap. Sometimes that's a problem.
But path of least resistance, right?
Yeah.
It's easier to get that client funded on an alternative route than it is go prime lending, right? And it's like, well, Scotiabank may do some files that client has with alternative, but if that team or that brokerage doesn't work with Scotiabank,
they don't know it.
Then they don't know.
Yeah. It's Charlie Munger used to call it man with a hammer syndrome. To a man with a hammer, everything's a nail. So if your hammer is private mortgages, you're going to be like, private mortgage. And it's like, really? Maybe. But so for sure, there's a little bit of that happens. What are the things that I want to ask you about? So you made some changes to your process. You're always looking at it. So with the program you have, it's built on Salesforce, so it's pretty robust. Do you do it yourself or do you get someone to help you?
So actually connection from you and Denise. So Lisa Banks out in BC does all the background programming, and changes.
You just say, hey, I want to do this. Because the thing I see where brokers make the mistake with this and it becomes an exhausting is that they think they have to go fix I want my CRM to do this, but then they spend hours messing with it. It doesn't really work. Meanwhile, they're not making money.
Yeah.
You pay an expert.
Yeah.
Just
100%. But most people don't have the thought process to even put that into place anyways, right? Like the document that we have created for our system is like 120 pages, right? Of different emails. And it's, they go out. I can have one status that has 100 different emails that maybe go out depending on, whether it's a purchase, refinance, renewal, etc. And whether that's a prime lender or a private lender, it could be a different email.
Different communications, yeah.
If that client's buying in London versus Toronto versus Alberta.
Because Toronto has different taxes.
Yeah.
Like property taxes.
Completely different email.
Right.
And the system knows how to do that based on the what if scenarios that I put together.
Yeah.
I needed to create the what if scenarios. Lisa codes it in the back.
And that's what you should do as a broker. You should be the one who has the technical knowledge, but then don't be the person who actually makes the machine move the parts around.
Yeah. Mm-hmm. Yeah. But I would say most agents as well, like you're better off focusing on what you're good at. And if doing that isn't your specialty, then don't even try. Like so many agents are like, oh, I got Jungo and Jungo sucks. It's like, but you didn't put the time and energy.
Yeah.
So my right hand here and I probably both have over 300 hours into the systems at least. And then Lisa probably has, based on her billing, close to 300 hours into our systems. Right. So that's almost 1,000 hours combined. That's half a year of one person sitting down and working.
Right. That's not insignificant.
No.
What's something that you failed at, but now looking back, there was a lesson in it for you?
Accepting anybody as an agent on my team.
Okay. So you just would take it. You take them on and then you realize, oh, we're not a fit.
Yeah. Yeah. So one of the things you used to say in your coaching was client avatar, right?
Yeah.
Who is your ideal client that you want to work with? And we've kind of implemented a agent avatar.
Yeah. We
have a particular agent that we want to work with. And if you're outside of that, unfortunately,
it's cool. Yeah.
We're not the best fit.
Yeah. That's really smart. Better off to focus on, it's so easy to try to be everything to everybody, but then that never works.
Yeah.
Right. I tell mortgage brokers, the people you go to their website, I specialize in commercial, residential, private, second, third, I'm like construction. I'm like, you don't specialize in anything. You're just throwing everything against the wall, hoping somebody calls you, but no one will.
Yeah.
Because you don't actually stand out. You know what I want to ask you about is, so as an accountant, I'm actually surprised that you don't get more business from accountants. Well, why do you think that is? Or maybe you do, because you said 60% was financial planners, but have you ever tried to get business from accountants, or are you just like, those are not my people anymore, or what?
No, it's not that I haven't tried. It's that accountants don't always look for the opportunities, right? Mm-hmm. So accountants are more, behind the computer doing the work versus the sales type of person. And that without
financial planners got more sales.
The sales,
for sure, yeah.
And they're always out there hungry for the next client, or how can I improve helping my existing clients? Where the accountants are more, I just need to get this work done.
Right. And they're usually, most of the time, they're not hurting for clients.
Yeah.
In fact, they just have more work than once they've been doing this for any amount of time, they have more work that they can keep up with.
Yeah. Yeah. So the guy that bought my accounting practice, he's a decent referral source, but not somebody that I necessarily count on for referrals.
Right.
But beyond that, a lot of my business isn't from accountants. Also don't want to specialize in small business owners.
Right.
Right.
Yeah. That's a different client type.
Different clientele.
Yeah. Cause Denise, she gets a ton of business from accountants, but that she loves the business for self and the self-employed clients. So back to the client avatar. Absolutely. If you want to be a business for self expert, accountants are a good source.
Yeah.
You're a financial planner, accountant clients are probably more prime type clients, right? Because if you're putting money into investments, that's already, your 80% of people are eliminated because most people don't.
Yeah. So
it would change the profile of your client type, which then changes the profile of your lender types because you got to have the right lender partners to serve those clients.
Absolutely. And even we talk about client avatar and agent avatar, but also who's your referral source avatar?
Right.
Right. So if you look at financial advisors, just as the broker space, we have a vast difference between individuals that are doing private lending and prime lending or commercial or residential, whatever. Find a financial advisor who works with the clients that you want to work with.
Right. Because they're not all the same.
No.
Yeah.
Right.
And so what the ideal financial planner that you have found, what is that? How would you describe them as an avatar?
So both of them are very, very successful. Both of them are very hungry and want to grow. And then they have successful clients as a result. So the one focuses on the medical field, like I said. So his clients are
medical professionals,
right? So medical residents today, doctors tomorrow. Mm-hmm. Who doesn't want a doctor as a client? And a lot of people would look at that and be like, well, they don't need mortgages. 100% they do need mortgages.
Yeah.
And they want mortgages. They're not scared of debt. They've been used to carrying.
They've been in debt forever. By the time they get out of school, they're in so much debt that
hundreds of thousands of
dollars. They don't even, it's like nothing. Right.
So they're not opposed to it. They understand it. And then the other guy that sends me a lot of business, he goes through his own database and gets rid of clients that aren't a good fit for him. Mm-hmm. And I know if he's cleaning up his database, then the ones that he has left over are going to be a good
quality clients.
Good quality clients, yeah.
Right. And are they from certain financial planning companies you find better? Is there some that are, because some of them have internal mortgage people, but most of the time people, I think they don't, if they're good, they usually don't use them anyway because the internal person is not that's, I don't know. I have not found that to be a problem if you're trying to find a good financial planner.
No, a lot of them do have certain relationships. But I wouldn't look down against one particular brand. Again, similar with the
it comes down to the individual person, because some financial planners are going to want to refer everything to their internal person with Next, and some of them don't at all.
Yeah, 100%.
So it depends on each individual.
Yeah, and we have 2 agents on the team that came from Investors Group, right?
Yeah.
They were the mortgage specialists with Investors Group, and a bunch of their business still comes from Investor Group advisors who have a specialist, like a mortgage specialist in-house. And they still send it based on the relationship, right?
Right. Because again, relationships still matter even in all this stuff. That's amazing. Okay. So, what's one other tech? He's talking about Jungo. What's one other piece of tech or tool that you find helpful?
Oh, piece of tech or tool. I'm actually not that techie. I know that sounds weird.
But it's probably something you even forget about. Like, do you use calendar links or like Loom videos or any of that kind of stuff?
Yeah. So we use Calendly. We actually use BombBomb.
Yeah.
So again,
but the thing is, it doesn't even feel like a tool. It doesn't seem, because you use it
Yeah. So I like to control my time, right? So how can I be as efficient as possible? And so I use BombBomb instead of client meetings.
Right.
So once I get that application in, once I've underwritten it, I record a 3 to 4 minute video of my screen. Depending on the time and location, I may or may not be on video. But I go through my Excel spreadsheet and I break down the costs for the client. Right? What's the maximum you qualify for? What are the options that you can present to you? I go over every question that they could possibly have for me in those 3 to 4 minutes.
Yeah.
I send it out to them. Very, very rarely do they actually want to set up a call or have questions.
So do you do discovery call first? Like get to meet them, find out if they're a good fit, and then, okay, great, here's the next steps to the app. And then once you've got enough to build a plan, you send them the plan digitally.
Yeah. So that discovery call is on average about 6 minutes.
Yeah.
And I'm just collecting.
The thing is, people are going to hear that and go, how's it possible? It's because your clients probably all look very similar. It's
very similar, but what else are you going to talk about? Right. Like, not to sound rude, but like, I don't care about the personal life, right?
Yeah.
Like, I don't want to get into that. And I'm not talking about products or rates at that point, because I haven't pulled credit. I haven't reviewed your application. I don't know. So the last thing I want to do is say, hey, I can get you a 4.39% rate and your alternative lender. And now we're going 5.5.
And now you're trying to sell against yourself.
Right. Yeah. So it doesn't make any sense, in my opinion, to be spending too much time at that point. So, we use Velocity, and I have my client experience up, ready to go. And I'm having that conversation with the client, getting the basic information of what they're doing, like whether they're purchasing, refinancing, which I typically know from the referral source anyways.
Yeah.
What they do for a living, that's going to dictate what docs I'm requesting. And just a couple of basic questions. And then as I'm on the phone with them, I'm sending them the link to complete the application, not taking it myself. They're completing it. Once we get it back, I'll underwrite it, and then I record that video. Like I said, it's 3 to 4 minutes, and then most of our communication otherwise is email.
Right.
So that's 6 minutes is typically all the time that I spend with that client.
Wow.
They don't care to talk to us either.
No, they just want what they want. And there's also the thing I would say about your type of clients, because they're coming referred from somebody that they have a high level of trust for. That high level of trust makes everything move faster. You don't have to build as much rapport, because it's not like, if they even came referred from a friend that they kind of know, it's different than from somebody they trust with money.
Yeah. Yeah. And when you look at the financial advisor, they're a trusted advisor. So
we just called an ambulance. You can hear that.
Reminds you of the good old days.
Yeah, exactly. A little PTSD. I'm like, from back when I was a paramedic.
Yeah. That happens on an hourly basis. The hall is just down the street.
It's a domain specific level of trust, right? Like, I trust you with money because this guy I trust with money. Therefore, it's much quicker.
Yeah. And then like, I'm going through my video that I know answers the questions that clients have, because as a client has reached out in the past and said, what about this? I'm like, okay, I need to incorporate that.
Right. So you're actually it's kind of like that. You're getting rid of any objections or questions. So then it's like, oh gosh, this guy's thought of everything. And then that actually increases trust. Yeah.
And then when you look at, if you're dealing with a couple, right, you're trying to say, okay, what time are you available to have a meeting? And maybe your husband or wife work shift work. Well, now it's very difficult to set up a time that works for everybody. I can record a video at 2:00 in the morning, they can watch it at 7
I hope you're not
a.m.
working at 2 o'clock in the morning.
Unfortunately, I do. Mm-hmm. They can watch it at 7 a.m. They can watch it at 3 o'clock. They don't need to be together. We don't need to go to back and forth to be like, hey, what's the best time to meet? If I have meetings all day, I don't need to worry about that. And they can watch it
again. So if there's anything they're unclear on versus if you're talking to them and they miss it, because how often do they mishear something and they're like, I thought that's what you said. It's like, no, I actually got a recording.
100%.
So then there's no confusion.
And if there's a language barrier, sometimes when you're having that conversation, they may not understand it, but with their ability to stop, rewind, and rewatch it, it's a lot easier. But it's also touching multiple senses, right? Mm-hmm. They're watching the video, they're listening to it, and then they can also read any script that I have written as well.
Right.
And I'll include a PDF of the document that I'm reviewing with them. So they have it there too.
So if let's say if there's a client document that your team needs, will they use video for that as well? Or do they just say, like, let's say if a client's having trouble sending you a document, it's confusing. Will they just pick up the phone and explain it, or they send a video? What do they typically do?
Depends, but video, if we can use video, I'll use video.
Right.
Yeah.
There's this great phrase I've heard, like show, don't tell whenever possible. So if you can show someone, it makes it way more, they can understand it better than trying to just tell them versus show them. So that's what you're doing.
And as long as I don't talk about, the income or credit within the video, I'll actually CC the realtor on that video as well. Now we ask for consent to discuss personal matters with their transaction partners up front. So we have the consent.
I think transaction partner. That's a good name. That's a good title.
It's not just realtors, right?
No, there's more partners.
Realtors, solicitors, financial advisors, insurance advisors, etc. But we ask for that information up front and consent up front. So I'll actually send the video with the realtor. And then the realtors are always blown away.
Right.
But then there's no telephone where it's like, hey, they said I was good for an $800,000 purchase. And it's like, no, that's not what I said.
Right.
That realtor can watch the 3 to 4 minute video.
Saves you so many more touch points.
So much. Right.
And see, I'm glad I asked about this, because you said I don't have any other tools. I was like, no, I knew you were full. I just got to dig. I know it's there.
But it's just second nature.
Yeah. But it's not a new, it's like saying to you about your phone. You just don't even think about it because you always have it and you just use it when you need it.
Yeah. Absolutely.
So that's fantastic. Where can people find you online? There'll be links in the show notes, but like if they just want to look you up, how do they find you?
Yeah, Instagram, but I'm not very active. So Team Armstrong Mortgages or Armstrong Mortgages are the 2 Instagram handles.
Yeah.
And then email and text.
Right. That's awesome. Well, hey man, thanks for chatting with me again.
Appreciate it.
Okay.
Thank you.
Hey, thanks again for listening. And hopefully you got some nuggets from that conversation with Jason, and that financial planner trick or tip I thought was pure gold. And hopefully, you take that and apply it. And as I always say, there's no problem in your mortgage business that someone else hasn't already solved. Your problem is who's got the answer. Hopefully this podcast provides some of those answers. If you're not already doing this, follow me. Check me out on Instagram. I've been working on creating a better social account over the last year, depending on when you listen to this, and go check that out. And also we have an email where every week we send out links. I send out links to the best stuff that I find over the previous week, and it's super useful. You can check that out. If you click on my profile on social, there's a sign up link there. And thanks again for listening. And as I will see you on the next episode.